Hi, I'm Ken Poletski with Community Real Estate Group Keller Williams right here in Southeast Washington State. It is time for our monthly market update, and we are in the month of June, so we're getting close to the second quarter of the year being completed. And what a market it's been. It's just been changing, and real estate, as you know, changes all the time. It is moving up, down, sideways, right? So as a real estate professional of 29 years now, I find that looking at market numbers, active, pending, solds, average days on market, average list price, sales price, helps me guide my clients. And one of the reasons I like to provide a monthly market report is to give my clients and the consumers in general just a general knowledge of what's going on to help them make decisions in whether they're in the buying or the selling process or just want some general knowledge of what's going on. So we're going to dive into this month's market update and give you a full report. I hope you're subscribing. If you like what you see, please share it with your friends or family. Please subscribe and come back and check us out. We're going to be doing more educational stuff on our channel, as well as providing the current market data numbers. So we currently have active properties, 959 properties as of this June, right? So we are 5 months into the year, and that is up significantly from last year at this time when we had only 779. So what does that say? That says that the buyers out there have a lot more choices, right? They have options that they didn't have before in the previous years that we've been in this market here in the Tri-Cities. And new construction is across the country already way behind in their production levels to even meet or exceed what the volume that we'll need in the unit count for the consumers that are out there looking to buy. What's holding them back? Well, we thought interest rates were. We thought those were having a direct effect on the market, and the consumer, the buyer, has kind of gotten used to the new norm, if you will, right? We know that it'll change. We know that it cycles. We've seen it statistically, and we've seen these interest rates before. The low 7s and high 6s is where we're currently sitting at. This inventory might not last much longer. If those rates were to drop, we would see a significant absorption of those numbers, and it would have a direct impact to what the average prices are. On the new construction standpoint, we're sitting at about 350 active properties on the market today. That shows us that there are new homes being built, and these are the ones that are only listed in the MLS. And so that doesn't count the vacant lots next door, the upcoming subdivisions that Tri-Cities is seeing on the horizon too. So, you know, we're looking at nearly a third of our market being new construction, which is great because that just shows that we have more growth going. But it also keeps that seller as, you know, am I priced appropriately, or is the buyer going to go buy a brand new house, right? So let's look at the average listing price. So as we look at the active listing price, these are homes that are sitting on the market waiting for a buyer. Some of them are just brand new. Some of them have been on the market for many, many months, right? So, and when we look at that number, we're looking to see, you know, pricing competitively, what the average price is of homes that are out there. And as we look further into the slides in the pendings and solds, you'll see that that number shifts around a little bit. So the average listing price currently today in the market is $556,000. So if you look at this chart and you look at the light pink and the dark red, you're going to see that the new construction and the average price are really close now. And that is the first time that it's been happening. It's been started a few months ago, and we started watching that trend where new construction prices were quite a bit higher than total market value. And now they've met, right? So what that might do is predict that the home seller that has the 20-year-old home competing with the brand new home may have to be flexible in their pricing, may have to price it really aggressive or offer some seller concessions towards buyers' closing costs or agent commission, those types of things that'll be involved for the buyer side of the transaction. So this is getting really close in the active markets. We've been watching that trend over the last few months. If you look at the chart, you can see that, but look at last year's numbers, right? Last year's it was 616 and 590 in June and 616 and 582 in May, and those numbers have now kind of come together, right? They've merged. And so what we're going to watch is the competitiveness of new homes versus the resale market, and watch what's going to happen on pricing. It may bring prices down, but one of the things that I've been tracking is that the prices have started to increase over the last several months, and we're just looking at the June to May to April, so you can see that that has been steadily climbing a little bit, right? And looking at those numbers. So we're going to continue watching that really closely. And another tell-all, of course, has been the days on market. How long are these active homes sitting on the market before they go under a contract, right? And these homes haven't sold, so how long have they been on the market? Average would be the better question. And we're looking at about 75 days and 101 days for new construction homes, right? So those are a little bit skewed and hard to track because a builder could put their home on the market as a completed product or as something that's been available to the consumer while it's being constructed. New construction time periods around here from anywhere from 3 to 6 months for standard homes, and then custom homes can take much longer than that, of course. But those sometimes hit the MLS and sometimes don't. It just depends. And we look at all the numbers as we get them. So we'll continue watching days on market, and I'm predicting that we're going to see days on market begin to drop even lower as we see the interest rates maybe come down even further in the later part of this year and then into the early part of 2025 in the spring. So hopefully, and that's going to cause a surge. So if you're a buyer out there, please don't wait. Please contact one of our agents at Community Real Estate Group, Keller Williams, and we will help you get into a home before it's impacted by the interest rates being dropped again. It was definitely impacted by the rates going up. They shot up through the roof, and now it's going to be impacted when the rates come down because the market will have all of the inventory gobbled up by every buyer that's out there waiting. And then once that's done, we'll be back in a very, very aggressive market where buyers are offering higher than list price again. So another number that we like to track, of course, are the pended properties. How many homes are coming onto the market and then they're getting pended contracts, and how long days on market that takes. What's that price look like compared to the listing prices? And so we can tell if a seller can push price, or we can tell if a seller needs to, kind of be a little bit more conservative and price in the middle of the range or even at the low end of the range, depending on their circumstances, right? So out of the pended properties, we're currently sitting at 583 pended homes under contract. Those are homes that have been accepted by buyers, and contracts have been written, contracts have been signed around, and they're probably going through the inspection phase or the appraisal phase and working their way to closing in the sold. We're watching that very closely, and that number in that light pink category, if you look over month, it's been climbing, and this is the highest month of the year so far. Not to say that's not normal. If you look at the dark black numbers from last year's numbers, that is an arcing pattern, because we do have an arcing pattern in real estate. We have slower months in the early part of the year and in the late part of the year, and then of course our peak months are in that summer time period, which is why you hear sometimes that I'll put it on in the spring, or I'm going to wait till summer to buy when my kids are out of school, those types of things. So but the interesting number to me here is last year over year, that our pendage is quite a bit higher. It was 536 compared to the 583, right? And that's been month over month. We've been watching that all year long, and we are predicting to close more homes this year because of that consumer confidence that's coming back, and they're electing to move forward even at the higher rate. So we're watching those numbers closely. You can definitely tell on the graph that we're having a great year so far, just looking at a comparison of last year. And last year was a good year. It wasn't the best year ever. If that was the case, we'd be back in the bidding wars and the craziness of that market in 2020 and 2021. So we'll see what these interest rates do at the end of this year, but I already know that as we're pending through looking at June's numbers, we are probably going to have a higher pended number again next month, right? And we'll watch that really closely, just going off a traditional market. So let's look at the average prices of the pended homes under contract, see what the list price was. We don't know what those sold prices are yet, because we'll see that when they close escrow, so that'll be in the sold category. But one of the things that you'll see is the pended prices have been changing the last 3 months as well, right? This year we're starting to see a slight increase in pricing, and that is something to be noted. If you're a buyer out there, again, just to encourage you, if you're a buyer out there, the prices have already started to climb because the consumer, the buyer pool out there, is getting used to the interest rate and making a decision to purchase now, which we encourage. If someone was to ask me when is the best time to buy real estate, yesterday. That's pretty much my common answer. Yesterday would have been a great day. Today's just as good. Tomorrow, I don't know, right? That's the unpredictability. I don't have a crystal ball to tell you what the rate will be in the morning because it changes on the daily basis. So I am encouraging all buyers that I work with actually to make haste and try to get into a home as soon as possible. Not saying settle. I'm not saying give up your wants and needs type of thing. I'm saying look at the numbers, look at the budget, get into a home, because I can predict one thing. If the market inventory drops, the competition will be higher, the prices will rise, and the home that you purchase today will be worth more tomorrow, the next day, next month, 6 months from now, that type of thing. So as we look at this chart tells us a lot. Obviously, I apologize for all of the numbers there, but I'm a numbers guy, so I like to look at that because I like to track where we're at and where we're going. And that's for my consumers, it's also for my business planning, right? So I guess if I can share this with you, I want to. These numbers are showing us some stuff, right? We already said that in the active properties, the new construction and the resale market are coming together. The pending properties are showing pretty much kind of the similar number, right? When we're looking at numbers of 476,000 and 460,000 new versus resale, right? And we're tracking that, we are seeing it's getting really, really close. And look where we were last year. We were at 498. And 453. So what did that show us? Right there, just that piece alone showed us that last year's prices were still a little bit higher than this year, but this year's prices, they've kind of caught up to where they're at, right? 460, 476, they're kind of getting even. Last year, there was a bigger gap between the new construction and the resale market. So as we look at the numbers and pending properties, we're looking at what they are actively listed for and they're under contract for. So the pendant being in the $460,000 total market average just says that listing homes listed in that price point are under contract average price, right? So it doesn't mean we have our highs and our lows, that's just the average price. And when you look at May's numbers and you're looking at last year at 451 and this year at 467, that's a 3% increase year over year for that month, right? And you go back to April, the same thing, 435, 459. So we're watching the market increase in price in those months. Now, June's was a little bit closer, 460 and 461. If you look at the new construction on the same graph, it's been dropping slowly, right? 526 in March to 492 this year, 506 in April to 482 this year, 497 to 476 in June. So new construction has still been laddering down, still been coming down just a bit. And I've said this before in the last months, and I say it every week in my week, it's not that the prices have been dropping and the builders are cutting price. Yeah, they may not be making as much, but it's really what it is that they've changed their product line to be a smaller product, right? The square footage is less, therefore the price is less. So watching that carefully will give you a more exact or a micro number for you specifically. That's why you need to reach out. So the days on market, the overall number here in the pendant properties is in the 40s, right? And when we're looking at being in the 40s, that means that, remember, we were 76 days or 75 days for the active properties. And in the pendant properties, we are at 40 and 46. That new construction was 101, now it's 46. Why? The pendant property on new construction might be going under contract because they went to a model home and they picked a plan and then put it on the lot, and then it went pending in one day, not 101. The resale market is a little bit different. They don't get a chance for pre-sale or come on the market pended. So they are going to sit, and we were watching those really closely. But if you notice, it was 75 days on the active, and it's only 40 days on the pended properties. That just means that those ones that are priced appropriately are going off market. So sellers, pay attention to that slide, right? Pricing appropriately, get your house under contract really quickly or at market rate at 40 days. So that's an important number. Now we're going to jump into the sold category, which is already trending to be a higher amount of solds for the year, as I said earlier, strictly because we have more inventory coming online and the buyers are now getting comfortable in that interest rate. So let's look at those numbers. So as I've said before, sold is our rear view. It's the reflection of what we've already done. It's the past, it's the history. It's also a good basis for us to predict what our homes could sell for or list at and then maybe sell for. It also gives us a number and a trend of where we're at. And if you look at last year's light blue inventory number of the total market, you'll see the arcing pattern. The arcing pattern shows that the market does fluctuate in the springs and the falls where it starts to slow down and speed up, right? So that's what we're in. We're in the speed up trajectory right now. If you look at the arcing pattern and you look at that 388 number, right? These are sold homes for the month of May, already in the books, closed, done, new buyers, right? And but look at last month, it was 367. But the bigger number to look at is last year. Only 298 homes sold in that same month, right? And the month before this, in April, only 284 homes sold. Looking at the trajectory of where we are predicting to actually sell quite a few more homes than last year. We may hit that 4,000 unit count again in the greater Tri-Cities area where I'm at here in Southeast Washington. We sold 3,861 homes last year, but 4,500 homes the year before and 5,500 homes the year before. So we're still down, but our market is rebounding. And when it rebounds like that, and you're gonna see on the last slide of today on the presentation, but when the market rebounds like that, you'll see it's normal. We're seeing that it's normal. And when you look at the chart in that last slide, you'll see 2007 numbers all the way to 2024. So what does that tell us? New construction is also up, right? So if the resale market, the total market's up, the new construction market's up, we are predicting to capture more sold properties. That means we're still moving a lot of home buyers and home sellers around the area, right? Part of it is the job economy here. The job economy is great, right? We have new jobs all over the place. We have development, Dairy Gold's being built, the Amazon plant's opening. I mean, lots of different things that are happening in our industry, in agriculture, in medical. I mean, one of the medical big offices just got absorbed into Cadillac again, so that's going to be moving some people around. So those kind of things are helping our industry. So what is the average pricing of what's selling out there? And how does that affecting our market? Is it on the rise? Is it on the decline? Is it even, right? So one of the things on this slide that we're doing differently is it's not the active price. This is actually the sold price. These are what these homes sold for. And there is another metric that we could check, list price versus sales price, and maybe I'll do a presentation on that one day. But the average price of the sold product that was in the month of May, because that's only the month we can do backwards, was $457,000, right? That's great. Last year at this time, it was $429,000. That's a big increase, right? In the month of May. That's a significant amount of an increase. That's a $30,000 increase. So that is, 7% or something in just that month. So look at the month before in April. The month before in April was 438,000 compared to last year at 432, a smaller increase, but yet an increase. Look at the month of March, 457 compared to last year at 444, another increase. If that doesn't tell you that the prices are increasing, buyers, that means that you should get out there and buy a house right away, because every month this year so far, as the peak months started rolling out, the prices have jumped up a little bit, right? Last year, you would have gotten a lesser price for the home and have already made some money this year. So if you were a home buyer last year, congratulations. You might be thinking, maybe it hasn't appreciated, but it is. These numbers don't lie. And in the new construction world, last year, we've already said earlier in this presentation that the prices have been dropping because of the inventory style, the size, and things like that for home builders. But we are seeing it kind of balance out. When you're looking at the sold price for 457 a total market or 466 of new construction, they're getting really close in the month of May. When you're looking at 438 and 475, there's still a gap, right? That just means that in that month, something different in the metric changed. We're gonna get a whole year end report, which we'll watch. But if you look at those numbers, it's been pretty steady when you're going across the board following that. The dark blue number you see on the slide is last year's numbers, right? That's last year's new homes. And you saw that drop, and you saw it level out in the August, September months of 2023. We will see what that's gonna continue to do as we move forward into summer right in the next few months, right? So as we check that out. The same has also happened in the total market, which is the light blue slide, and that has dropped, but just not nearly as much, because those are set off of comparable pricing, right? When we're looking at the market, we're looking at what the neighbor's house sold, what it sold for down the street. We're not looking at different cities unless it's a unique property, that type of thing. So a professional will come out from our company and do a free home market analysis. If you'd like information on what your house would sell for in today's market in 2024, you can reach out to one of us at communityrealestategroup.com or send a message here in the YouTube channel or TikTok. You can also email us or call us, right? And we'll provide you a market analysis just on your house. So overall, in the sold category, we are seeing an increase in price, and we've been watching it pretty closely. We are also seeing an increase in the amount of units, which we're identifying as we're going to be selling more homes this year, which is great because last year it was quite a bit less off the year before, and the year before was 1,000 homes off of that. So let's look at the days on market. Looking at these numbers, it shows that the sold properties are even less than the pended properties, right? And the pended were less than the active, because what it's saying is these select homes that sold in the month of May, the average days on market was only 39 days. That just says they're priced right, and they're nearly only sitting on the market a month before they go under contract. And some of that is the new construction that you saw is now dropped down to 88 days, right? As an average, it was 101 active. The pendants were in the 50s, and now we see an end result of 88 days in the month of May. We'll be watching those new construction as we ramp up the building season that we're in to watch the new construction days on market probably drop a little bit because it's actives. They go under contract, it stops days on market because they're not under contract. Takes 3 to 6 months to build, and then they close. So whatever those numbers look like, we'll be watching. But we are seeing a decline in the days on market across the board, active, pendings, and solds, right? And I hope you're enjoying the monthly market updates. Please share it. Share it with a friend, share it with a family member, share it with the neighbor if they're thinking about selling their home and want to know what's going on in the market. This is a macro. This is the entire southeast portion of Washington State. I would do one specifically to your neighborhood if that's something that you would like. Let's look at the total sold homes for the entire year. Like I said, this chart goes back to 2007, but in 2024, we've already sold 1,529 homes, and 397 of those were new construction. So that's about 20% of that, a little over 20%. It's been new construction. Those are closed homes in the books, new homeowners. Sellers may have moved out of the area, may have just moved down the street. I've had that happen. But let's look at 2007. Market crashed because of the mortgage and loans that were out on the market not being sustainable. In 2008, it was the lowest, and then we had that slight rebound in 2009, which was the second year after, and then you saw it cycle a little bit for a couple more years, and then it slowly crawled its way out of that recession. Now, let's look at 2021. 5,500 homes sold, right? 5,500 homes sold that year, and it dropped because of the interest rates hike that we saw. It was a crazy red light, stop light, do not pass go kind of shift. I've never seen anything like it, and I've done this for 29 years. And when we saw that, it dropped drastically. We lost about 1,000 homes, a little over that next year. And then, of course, last year at 3,600 homes being sold was another low year. And this year, I'm predicting it to be higher than last based off of what I've been able to share with you in these slides. But it does show you that we might be into that 2007 recession style. It could be a couple, 2 or 3 years of less properties sold in the market, but we are already seeing evidence that the market is not really slowing down. It's kind of sped up in 2024. So we'll continue watching that. And I hope you're getting value of this. This is one of the things that I like to do for my clients, consumers, the general public in general, just to keep them apprised of what's going on in my world, right? The real estate world. So please, if you're liking what I'm providing to you in the monthly market reports or the weekly market reports, share that. Show your friends the YouTube channel, show them our TikTok, those types of things where we can get that information out to as many people as we can, because we are encouraging buyers to buy, right? And sellers to price appropriately. If your time is to sell, because life has changed, then let's get it out there on the market for you and provide you with a market analysis. This is Ken Poletski with Community Real Estate Group. If you have any questions, you can comment below. You can email me, text me, or call us here at our office. So thank you and have a great month, and we'll see you again next month.